Group President Gina Bolvin. Gina, great to see you. Thanks very much for being here. What a first half. What does the second half look like?
I think, even healthy bull markets have pullbacks, Maria, and the average pullback in a bull market is about 13%. We wouldn't be surprised if we've seen that, but we are very bullish for the rest of the year and for the next couple of years. And one of the reasons is we're starting to see this market look healthier. We're not just getting the top 7 stocks driving the gains. We're starting to see higher highs, higher lows. We're starting to see more participation. Yesterday, we saw the XLF, the banking index, up about over 2%. And we're starting to even see some green shoots in small cap stocks, which really haven't done much. So the average bull market can run about 5 years, and we think we're just getting going.
Wow. All right. Well, we've got certainly strength in a broadening out that you're seeing. You mentioned the banks. We had the stress tests out yesterday. All the banks passed. It was a good report. That certainly was a boost. But what does that mean for the Federal Reserve? I mean, the futures is pricing in a 90% chance for a rate hike at the next meeting. That's at the end of July, as you know. The Federal Reserve Chairman Jay Powell says that the next phase of rate hikes could be harder to predict. And the National Economic Council Director, Lyle Brainard, said that she sees potential for a near 2% inflation rate by November 2024, Gina. So we're still watching inflation higher than where they would like until 24, 25. What's your take on the impact of all these rate hikes and what happens in July at the Fed meeting?
Well, it does look like they're going to increase rates in July, but the good news is the Fed thinks the economy is strong enough to raise rates. So the PCE is coming out this morning, Maria, and that's the Fed's preferred gauge of inflation. But investors need to keep in mind that is a May number. And we think we're looking ahead. We think we're going to be at a 3 handle by the end of the year on inflation. And here's how that's going to happen. Housing starts are up. When this new supply comes to the market, it's going to put downward pressure on rents. And this is really important because housing is 25% of inflation. And this has really been the sticky part of inflation. So we think towards the end of the year, we're going to be closer to a 3 handle and a little bit more closer to the Fed's 2% target. But it is going to take some time.
I'm with Lou Bassanese this morning. Lou, jump in.
Gina, I am so happy to have another bull in the camp with me here, and that's dispelling this myth that it's only the 7 tech stocks leading this market higher. You noted that you're seeing healthier fundamentals underneath, particularly in small caps. And I tell you, on a banking side, we're seeing value in small caps because they can't fall off the floor any further. In biotech, specifically in Q Biopharma, and then in medical device and Heartbeam. I'm just curious, where are you seeing in individual names opportunity in small caps? Are you playing individual names, or are you playing more of an index approach with like the IWM?
So we are a little bit more hesitant right now with small caps. We see a lot of value there, but there may be a recession. It might be a very mild recession. So we think it's early for small caps. Right now, we like industrials, and we still like technology. We think there will be a pullback. We like cloud computing, comm services, and cybersecurity. But we think it's a little early for small caps right now.
All right. We will leave it there. Gina, great to catch up. Thanks very much.
Happy 4th.
And to you, happy Independence Day. Gina Bolvin joining us. Your morning mover this morning is